right, good afternoon, traders. This is your free video from seasonalswingtrader.com. Today is Tuesday, April 18th, 2017. Hope everybody had a great Easter weekend for those that are celebrating. And let's take a quick look at the E-mini S&P, currently down around 10 points or so at 2335. You can see we've come back and retesting this break of the number 2 here at 2348.75. So we broke out, looked like we were going to trade higher, and now we've come back down. So all this really saying is a bunch of chop action, a little seesawing back and forth by the bulls and bears, looking like we want to eventually roll over here and possibly test the 2300. Our members are positioned for a target of 2300. We've sold some out-of-the-money call spreads on the E-mini S&P. But if we flip over to the stock side, AZPN, we ran our seasonal scan criteria this morning, and we came up with a stock on our radar, AZPN, a bullish trade idea to the upside. AZPN. Over the next 4 weeks or so, this stock has historically risen around 6% or $3.50 based on where we're currently trading, which is unchanged at $59. So a 6% rise over the next 4 weeks or so will take us to around 62.5 and some change. So that's what we would be looking at on a breakout of this small triangle here. We've had some congestion here. A little bit of indecisiveness around here. We come back down and tested the 50-day. All the averages are pointing strongly higher. Our oscillators are also pointing higher. So what we would look to do is possibly wait for a break here above this area, or a more conservative trader may wait for a break above this overhead resistance here at 59.85. So if we get a break and subsequent close above these levels, we would look to get long. A couple of ideas you can consider, depending on your trade account size, is buying the outright stock and selling the 60 calls for about $1.65 or $1.65 here to bring in some income. So if we bought the stock here at $59 and sold the 60 calls, brought in about $1.65, our total profit at expiration above 60 would be $2.65. So we take the $60 strike less the price we paid, $59, gives us $1 of profit plus the premium we received, $1.65. So $265 roughly per contract or per 100 shares there, doing a covered call scenario. A couple of other options, no pun intended, would be looking to sell the out-of-the-money puts or put spreads, looking here at the 55s, selling cash secured put at the 55 strike would yield us around 65 or 70 cents. That takes us all the way down here, 55. So if we bring in we bring in 65 cents, that gives us a cost basis of $54.35, assuming we were assigned the stock. If we're not assigned the stock and the stock is trading above $55 at expiration, we keep the full premium of 65 cents less any commissions. Alternatively, we could look to sell an in-the-money put, the 60 strike. So if we sell the 60 strike and bring in $2.60, it gives us a cost basis of $57.40. And believe it or not, that puts our support, puts us right below here, support on the other side of the triangle as well as the 50-day average. So if we break out to the upside, we keep all the premium. That is $2.60 roughly less commissions that we get to keep. And we were assigned the stock. Our new cost basis is $60 less the premium received, which is $2.60, which gives us a cost basis of $57.40 approximately. And then what we would do is look to sell calls against that position. So that's your idea of the day. Please feel free to email us at support@seasonalswingtrader.com if you have any questions, and we'll see you on the next update. Traders, like what you see, want more trade ideas each week? Take a $7 30-day complete member access trial by clicking the link below. You'll have immediate access to analysis and seasonal trade ideas on over 35 commodity and currency futures markets, as well as coverage on all of the major stocks, exchanges, and ETFs in the U.S. marketplace. If you like us, follow us on Twitter and Facebook, like us on YouTube, and we hope to see you on the inside.